Morning, everybody. I'm Ed Parcaut here with Bobby Atkins, and we are the Veterans Edition of Real Estate Jerky. How's it going, Bobby?
Pretty good, Ed. How you doing?
Good. It's funny. The other day I was talking about I wanted to get more veterans, and now it seems like that's all I'm talking to is veterans.
I know. That's good, man.
Yeah. Well, it's, the whole, I'm doing that firewalk for veterans the 12th and 13th of April. And it's called Operation Firewalk. You can go to operationfirewalk.com.org and it'll take you right to everything to sign up and everything. But it's just something that I'm trying to get more veterans to not commit suicide. And getting that community together has helped out a lot this year in my Rotary. So that's what I'm doing. So
good.
Anyway, how's the market?
It feels like the market's picking up, man. I'm seeing a lot more interest. Obviously, we're seeing competing offers and houses that are in good shape and priced properly going into contract in a couple of days. So we're kind of back in that
lack of inventory phase.
Yeah, 2020, 2021. Like you see something come up, let's not wait. Make time.
Right. And we saw a chart, I think last week or whatever. It's basically we're right. The amount of existing homes that are on the market or what the things that are selling, we're pretty much where we were in 21 and 22. We just had all the other refinance stuff going on that people were like busy and the market was going crazy, but agents were selling the same amount of homes.
Yeah.
And, it was, I don't know if you heard, but HUD just spent $3.8 million to figure out how to get more affordable housing out there.
That didn't. Hey, they could have paid you the $3 million, man, just to ask a lender.
Well, it's just, and 800 of that 845 was to see about taking commercial to residential conversions, right?
Yikes.
I can tell you right now, it doesn't work. Save that 845,000.
Yeah.
The pillars are in the wrong place. A lot of the other stuff are in the wrong place. It's just more costly to do that than it's worth. It's cheaper to tear down the whole thing and rebuild it. So you should have used that 308 million to buy all these places and convert them into housing. You know what I mean?
How do they waste so much money?
Because it's government. All right.
Gosh, man.
It's how people in certain industries are. I mean, I'm in business. I look at all the numbers, right? But if I work for the government and I was going to buy something for my office, I don't look at how much it costs because it doesn't cost me anything. We get a budget. If we don't spend it, we don't get it again.
Yeah.
That's how it was in the military. Remember, end of the year, we got to order all these supplies. Well, why don't we just give the money back? And because then we won't get it next year. We got to spend the money, And that's what's so horrible about all that.
Yep. Yeah, I agree. I concur, man. I remember those days.
Do you?
I do. Sorry, I had to adjust myself.
That's okay.
I looked like I was like a little kid in the room.
That's all right. What are we going to do about? So the market. So where was I at? FHA spending money on 3.8 million. That's just ridiculous. Yeah. But the only thing that they did good though, this came out last week, was I know this is a VA, but sometimes people with VA go FHA. Even though I know, don't FHA my VA, but sometimes people do because they've used up all their VA.
Yeah.
They came out, I don't know if you know this, but on FHA, that if you get behind, they have to put up to 12 months of payments into another loan. And when you refinance or sell that home, then you pay that off. It's called a partial claim. Gotcha. Well, during COVID, they realized that didn't really fix the problem. So they're coming out with a new program that starts May 1st. And then in January 1st of 2025 will be mandatory. Basically, they'll get you caught up and then they're going to reduce your principal payments going forward for 3 years.
Huh.
And then you go back to what the payment was after 3 years. So it gives you time in case, because during this period of time, people lost jobs, they lost this. So not just putting that money, did it help them, but they still couldn't make the payment because they didn't have the same income.
Yeah. And
so this new program, which they should have done a long time ago, is really going to help FHA people. And I'm like, they need to do the same thing for VA. It's because you brought it to me, 3 months ago about the VA not taking care of vets. And now they came out, we're going to help those 40,000 veterans in foreclosures now.
Yeah.
They still haven't finalized it, but.
Well, it's government. They spend money quickly and everything else moves slow.
That's right.
Right?
Yeah. Yeah, pretty much that. We were talking, I think, before we were live about insurance and how.
Yeah.
And there's two article that came out about delinquencies And they one of the things we really don't have anything. We're at like 3.3% delinquencies nationwide, and we're normally at 5.25%. All right, so we're really low. But what they're looking at is the insurance costs. California and Florida insurance costs are going up, and that can cause people to get more delinquent. And we were talking about that because we had clients who were looking at a manufactured home on a permanent foundation, and that's getting harder to get insurance just on the manufactured home on permanent foundation.
Yeah.
And then you add if it's in a fire zone on top of that, it's just a double whammy. Yeah. So it's like having COVID and the flu at the same time.
Is that possible?
I
guess.
I don't know.
I guess
two different things. I'm sure you could.
You pick up one thing, your system's down, huh?
Yeah. Well, I'm just saying you never know.
We had a buddy of ours at church that just recently had COVID, and I was joking. I was like, the only people that get COVID is the ones that test for it, right? Because no one ever knew, unless you were like in the hospital. You're like, man, I really kind of feel crummy.
Well, ever since Kelsey said I should be getting those shots and everything from the Chiefs, I'm going to go out there and get it too.
Yeah. So brought to you by Pfizer, right?
Yeah, exactly. Yeah, got Taylor Swift is converting him into the liberal.
I was going to say, why they still have to push those? I don't know, man.
Because they got to sell them. They got to make their money back.
Yeah,
they need to sell more money. But I mean, I tested a week or so ago when I was very congested. I knew it was allergies, but I'm the president of Rotary, and I'm up there each week on Thursday. I'm not going to spew in front of a bunch of people. When someone says you're sick, go home, I can say no, it's allergies. I tested. Go away. That's why I did it. Because there's commercials now. Because is it Walgreens or one of them? In 30 minutes, you'll know if you have the flu or COVID. So you can show up at these events.
Oh, gosh.
Well, it used to be we would go to work sick. We would do everything sick. And now we have an excuse not to go into work when you're sick.
I can say normally, if you're running a fever, you're sick, right?
Could be, but even allergies sometimes can't, because you have, you could have a sinus infection. You could be running a low grade fever. So I'm not a doctor. I was a corpsman, but I'm not a doctor, so that's not my part. I just do what I do so that somebody can't come back and say, hey, you brought COVID. You got all of Rotary sick with COVID. Oh, no. What are you going to do? Oh, wow. This week, I just realized Mike has to go over to his pets over in San Jose for becoming president, which last year when I was supposed to go this week, I started getting sick. I thought it was allergies.
Really?
Thursday, yeah, and I was supposed to be there on Thursday. Wednesday night, I took a test. I had COVID and I had 104 fever.
What's pets?
President-elect training for Rotary.
Oh, for Rotary.
Yeah,
okay.
It's called Far West Pets up over in San Jose. I just realized it was the 1st through the 3rd, which is this week. Because 29 days this month.
Yeah. Oh, yeah. Leap year.
Yeah.
Huh. So you can see how much I'm paying attention.
Yeah, it's 29 days this year in February, and that means whoever had their birthday, they get to have a birthday again on the 29th.
I can see every day is a Saturday for me, man. So like what month are we in? Do the kids have to go to school today?
There you go. The other thing I want to kind of bring up is if you're maxed at a certain payment and maxed at a certain loan amount, and you're trying to move them outside of different areas, just also look and see if there's some other factor that can come into play, whether or not it saves them money. And I know that's the loan officer's job, but that's what we do. Because, you move from one place to another place, there's something else that might pop up. It's like people go, I can't afford a single family home because I'm going to buy a condo. Well, now I have a $350 to $400 a month HOA. That's not saving you anything.
No.
Go buy that house.
Yeah.
And that's the same if you're going to go from, say, Modesto to Sonora. You could potentially go 250, your insurance in Modesto is 600. Yeah, it could be $650 a year. It could be, $65, $75 a month. You go up there, it could be $3,000. And if it's, even if you go down in the price point a little bit, it might not save you anything. It might be the same price. Yeah. And on top of that, you better get a electric car or a 40-mile-gallon car to go back and forth.
Yeah. Well, so I know there are certain scenarios where condos work for people,
mm-hmm.
right?
Mm-hmm.
But I had a friend who contacted me, and it would be her second home. The first one she bought was up in the foothills, so they sold that one this last year, right? And so they were looking at houses like 325, 350. I'm like, her and her husband make 6 figures, right? I'm like, you just have payment shock because they work in property management, so they had a free apartment for years, right? I'm like, you need to understand this is the market. That, this is what the payment's going to be. It doesn't matter regardless. But they just were stuck on that. So she was like, I want to go see this condo. I was like, okay. She's like, well, it just went on the market and I don't want to miss my opportunity. I'm like, don't worry. You're not going to have 100 people writing offers on this condo. And actually lost that client because I wasn't able to just drop everything I was doing right then, change my plans for the evening to go show them this house. Right. So she contacted another agent. I'm guessing probably the listing agent. And then text me back saying, I'm so sorry. We went and looked at it. We don't like it. I'm like, in your situation, a condo is a horrible investment, and a good friend like I was trying to be was telling you that, right? Like this doesn't make sense for you.
But sometimes people need to go see it in order to make that decision too.
And I was going to show it to her the next day,
right?
But it was just surprising, right? Like,
not really. I lost somebody for an eighth the other day.
Really?
Because I locked to protect, and then it got a little bit better, and somebody undercut me by an eighth. But the problem with the whole thing was it was a commercial property converted into a residential home. It's not something that's going to get done easy by anybody.
Yeah. So they're going to probably be coming back to you when they can't close it, huh? And you'll say,
They might be, but I'm too big. I'm
it.
slammed now, so I don't have time. That's going to, so the people have to realize when you go outside of the normal, because some people are going, I'm not, but it's worth so much money and I only need a loan for this on it. That's not how we look at things. We look at, if you don't make your payment and we have to get rid of that asset, how fast can we get rid of that asset? How much is it going to cost us to get rid of that asset?
Yeah.
That's how lenders look at properties. That's how Fannie, Freddie, VA, FHA look at it. They don't look at it, wow, there's so much equity in this home. We can make money if they don't make a payment. They don't look at it that way. It's not that.
It's like, who's going to want this besides you?
Well, if you're, say a property's worth 500,000, you're buying it from your family and they're giving you equity and you're only paying 240,000 for it, right? Because that's the purchase price. They don't need all the thing.
Yeah.
It's not worth 500. It's worth the purchase price you're doing. And if you're on title for 6 months to a year and then you refinance it, and now that 600 or 500 number comes into play, not the 250. But if you're purchasing, whatever you're purchasing it for is the new value. And and people need to understand that.
Yeah.
And I don't, because it's totally different. That's when people go, I want to get my house for, $40,000 cheaper. That's fine. But then you just set the price to now $40,000 cheaper.
Yeah.
Someday you'll make it up, but not today.
Well, I can say, and same goes the inverse, right? Like when we saw like the bidding wars, right? House is selling for 40 grand over, appraised value is now the new
comp. Yep. Yeah. And that's what I ran into this last year. I was trying to help somebody with a reverse mortgage and they were like, we're going to wait until rates get better. And so in October, their house was worth 440. It was, and please bear with me here. This all has to do with values did not go down. It's just what's being sold. 424,000. I just reran the same AVN, came in at 379.
Oh, just because more recent comps.
Yeah, exactly. So that meant they're not getting as much money out as they did. And that's what you have to worry about in times when we're not selling as many houses. And that's what happens in December, January, February ish. Sometimes it gets hard to make that value if things are going up because of what has sold. And that's why I say, like in the college area, sometimes of the year, your house is worth a lot and sometimes it's worth nothing.
Yeah. It comes summertime, right? When the market
right after summer, like September, October, it's worth a lot.
Oh,
because you just went through all the summer months. Yes, everything's sold and closed because everybody's rushing to get in. That's like when we had our house appraised, I think it was October, and I was like 100 grand off. I couldn't believe it.
That's a good thing.
Yeah. I was 100 grand under, right? That's what I meant.
Yeah.
Over.
No, the value was 100 grand.
Way higher than what I thought it was going to be.
Yeah.
Yeah. Now I look at things and they're like, oh, you don't have any equity. So it's just checking out stuff, making sure that you don't make mistakes when you're purchasing a home. Understand every aspect of why you want to buy a condo, why you don't want to buy a condo, why it's a single family house, why you want to do a manufactured home on a permanent foundation, or why you don't. I had somebody reach out to me about 2 manufactured homes on permanent foundations on the same property. And pretty much no Fannie, Freddie, FHA, VA. Even though FHA say you can do it, nobody will buy it.
Yeah.
So you have to find a regional bank, a local bank, small bank that might put it on a portfolio product.
And now what you're saying, no one will buy it, like you talk secondary market, right?
Correct. Not, so everybody wants to buy it because it's on 21 acres and it's a beautiful thing. You're better off putting 2 modulars, which are single family homes built in a factory, put on site, or you have a single family home and you put a accessory unit or another unit on there. Make sure it's a modular or it's stick built. Don't put a manufacturer. You're going to run into the same problem. It just messes up the whole title, and people don't understand that. They think it's the same thing. It's not, unfortunately.
Recently I went to the lot in Manteca to go look at those manufactured homes, and they've come a long way.
They're beautiful.
Yeah.
But they don't look like it, but they're still it.
Yeah. I know that's the problem at the end of the day, right? They're
still the redheaded stepchild of the industry, and I apologize for any redheaded stepchild if I offended you.
I got some red in my beard, man. Right?
What I mean, it's just not. It's when 2006 happened, right? We couldn't lend on manufactured home on permanent foundation for almost 4 years.
Yeah,
nobody would do those loans. They were too risky. That's what it is. It's riskier. That's why you pay more in an interest rate on a manufactured home also. And if it's not on a permanent foundation, that's between 10 to 14% of interest rates.
Yeah.
In a park.
That's wild.
Yeah. Well, yes and no. And the reason I say that, because equity lines are like that. You got to remember, it's a personal loan. There's nothing to tie it to. You can back up your truck and take it away.
Theoretically, yeah.
Not theoretically. Slap the wheels back on. Let's go, Margaret. We're taking it down the road.
Yeah. I was going to say, yeah. That's one I think that's one misconception that people have about mobile homes, right? Like, say there's one they buy in a park and they change their mind, like they want to move. It doesn't make sense financially to move that house.
No, and they have you, and that's why we had a guy on the radio last weekend. That's what he invests in, is RV and mobile home parks. And he when he first got into it, they'd raise them from 170 to 240, and everybody's like, okay, we can stay. They're worried you're going to kick them out. And that doesn't mean that you're kicking them out and they're taking the trailer with them. But he's like, we constantly replace owner, manufactured homes that are owned by the lot to people who own them, because we don't want to control those assets. Because then you have maintenance.
What was that guy's name?
Dr. Jeff. So it's Dr. What is it? Bear with me here. I'll get it. Debt-free doctor. Debtfreedr.com. And he's in Louisiana, and he does stuff out there. And it's and they talk. He really loves RV parks more than anything else.
No kidding.
Yeah, he's like that, because they also get propane income,
propane accessories,
ice, all this other stuff, utilities, Wi-Fi. They're making 6 figures off of propane sales.
Wow.
Yeah.
Well, they found the niche.
Well, it's everywhere. I'm like, what do I do with my 32 acres? I know what I'm going to do. And I'm getting sued again. I'm sure somebody heard that.
Yeah.
All right. That's all I have for today. Bobby, thanks for being here. I appreciate you. Thank you for watching and listening. If you want to help us, just subscribe, and you can reach out to Bobby by calling him at 209-550-1087. That's 209-550-1087. I'm Ed Parcaut everywhere. Reach out and we'll answer any questions. Bobby, say goodbye.
Goodbye.